Welcome back everyone. I'm the Swedish dividend investor, and today we have a subscriber request. If you're new here, we talk about dividend stocks and ETFs, and we do valuations. So hit that subscribe button so you don't miss any updates. Remember to read the disclaimer in the description down below. Alright guys, Marius3082 commented VHYL review. So I guess it's time to put on our Galaxy Brain mode and get to work. He is talking about Vanguard FTSE All World High Dividend Yield UCITS ETF. I've jotted down some numbers here in my spreadsheet. So we can see their price here, 61.01 euros. Their dividend yield is sitting at 3% roughly. And we can see their 3, 5 and 9 year growth rate here. 3 year 1.4%, 5 year negative 1.19% and 9 year CAGR 3.27%. Ouch. To the right we can see their dividend track record. You can see the dividend is in dollars, so when I calculated the yield, I first converted 2024's dividends to euros. And they have a very spotty track record, as per usual for us European investors. Total growth since 2015 is 33%. So let's just quickly jump over to justetf.com and check their stats. We can start with the performance. Also, let's compare it to FEUI and SPYW for total returns, since these ETFs are contenders for my dividend portfolio going forward. Let's throw in S&P 500 as well, since everybody seems to like using it as a benchmark. Here we can see SPYW outclassed them all for the periods we have. 32.88% return versus S&P 500 of 24.78%. FEUI 18.78% and VHYL at 16.44% for the 3-year period. So it doesn't look good for VHYL here. Let's check their top holdings, sector allocations and regions. Their top 10 holdings are JP Morgan Chase, ExxonMobil, Procter & Gamble, Johnson & Johnson, Home Depot, AbbVie, Bank of America, Coca-Cola, Chevron and Wells Fargo. Sectors from biggest to smallest: financials, industrials, consumer staples, healthcare, consumer discretionary, energy, technology, utilities, basic materials and other. And for the countries we have United States, Japan, UK, Switzerland, Canada, Germany, France, Australia, China and other at a whopping 22%. Now that we have a good overview of the ETF, we can jump back to the spreadsheet and head on over to the valuation page. Now we are going to compare it to FEUI and SPYW, and we're going to be using a 10% discount rate. The discount rate is our required return. We will use their historical growth number for each case and a fitting terminal multiple. The terminal multiple in this case is the yield at the final year of the calculation, since this is a dividend valuation. 3 cases, as always: normal, best and worst case. Let's do the normal case first. I've gone with 1.5% for the growth and 33 for the terminal multiple, so a 3.33% yield. Present value of 38.99 euros. For the best case, I've gone with 3.3% growth, so the 9-year CAGR, a bit generous, and 37 for a terminal multiple, so a 2.7% yield. We land at a present value of 48.49 euros. For the worst case, I've simply gone with a negative 1% growth rate. This is a bit lower than the 5-year CAGR. And I've used 28 for a terminal multiple, so a yield of 3.57% at year 10. We land at a present value of 28.99 euros. Not looking good here. What I also do, since I can't predict the future, is to decide a probability factor to count for all the cases above. I've gone with 60% for normal case and 20% each for best and worst case. That gives us a fair value of 38.88 euros. With a margin of safety of 5%, we are looking at a price of 36.93 euros. Now, that's pretty overvalued. I tried to be a bit more exuberant with the growth numbers and lowering the discount rate. At 7% discount rate, still overvalued. At 5%, it is still overvalued a tad bit. So I tried cranking the growth rates up, and only then, with higher growth and a discount rate of 5%, is it fairly valued. Remember, the discount rate is our required return. Now, how does this valuation look when we compare it to FEUI or SPYW? Let's take a look. FEUI is currently at an 8 to 8.5% annual return, and SPYW is just around 8% annual return. They were priced better in my iShares Eurostoxx video, but since then they started to go up. But hey, around 8% return is a heck lot better than under 5% return. So what have we learned today? VHYL have done pretty okay historically, I would say, but they are pretty overvalued for my taste. Currently, they have pretty decent businesses in their portfolio, but some of them are pretty high flying. Like always, these are my estimates, yours may differ. Conclusion: FEUI and SPYW does look more attractive. So if I were to invest, I would choose one of them, or do a 50-50 split between them. Alternatively, just do nothing, or wait for a better opportunity elsewhere. If you have a dividend stock or ETF you want me to do a valuation on, hit me up in the comments. I hope you enjoyed this subscriber request. If you did, smash that like button, subscribe if you haven't, and tickle the algo with a comment. I'm the Swedish dividend investor, and I will see you in the next one. Stay smart, stay patient, and keep stacking those dividends. Ha det gött!